Here to help us tonight, the investment pros, Kimberly Voss, president of Emporium Wealth Management, in-house. It's nice to have you here.
Thanks for inviting me.
All right, of course, it's always nice to have Jim Frischling, New Oak Capital president here. Jim, lot to discuss. Hita Prabhakar. Listen, in the long run, we know that the market eventually goes back up, at least if you look at a 20, 30, 40, 100-year chart. But, Jim, living it day to day is a lot easier said than done.
That's true. But look, last week started with China's slow growth. It ended with a very strong jobs report. And I think actually the market's holding it very well. If you look in the face of a rising dollar, that's a headwind for some large companies. And I think the market overall is being valued even higher in the face of that. But again, I think people are waiting for Wednesday, FOMC minutes to come out, and just start of earnings seasons, as you and Matt have already commented on.
So this brings us to our next real deal. There's my man. I've had this debate with Ben Stein for a decade now. He thinks nobody can beat the market because, well, all the information is out there. Everybody knows it. It's out there for public consumption. But the fact is, just because it's available doesn't mean that people know it, that they don't read it. In fact, I don't think most professionals read it. So, Jim, tell me where you come down on the market being efficient and, you know what, who can beat the market if all the information is out there?
In theory, absolutely. And in reality or in practice, absolutely not. The efficient market hypothesis assumes that all information is fully, accurately, and instantaneously, reached at the same point in time to determine prices. And in reality, rationality, emotion, the conflicting theory would be behavioral economics, which shows how many people do react to it. So the efficient market theory, again, it assumes one thing, but in reality, the markets are not efficient. Traders do act on wrong information. Investors act on wrong information. And that's where you start making money. But the hypothesis also assumes that people are making investment decisions for themselves. And the truth is we know that's not always the case, and the motivations are not always perfect. So, again, it really does fall apart in reality.
Are you hinting at something nefarious here? When you say the motivations on the person buying for someone else?
Buying on behalf of somebody else, right. Where they're buying for somebody else. Yes, the answer is that the alignment of interests are not perfect. So, again, in theory, the hypothesis, yes, on paper it makes a lot of sense. But in reality, when you start actually looking at the execution of these trades, the information, the misinformation, the disinformation, that's where, to me, it does fall apart.
You're kind of saying basically a big investment firm may have a banking deal with a company, so they're upgrading that company because they're doing business with them, which they're not supposed to do, but we all know what happens.
And maybe everything doesn't go bid, wanted, and comp, meaning finding the best execution in each asset class. It might be a negotiated sale, for example, or a large block. But again, I just feel the information's not perfect.
And I got to tell you also, all right, Jim, give us one.
Mine's more predictive in nature and using this platform to tell Microsoft, spin off Xbox. It is not core. I agree with Matt's point about the flexibility, the tax incentives that you get from the spin-offs, underfollowed, and I would own both if it happened. We'll see we'll see if they do it.
All right. Except, Jim, there was a large short position. Maybe when it's all said and done, we'll feel like there was a setup. I think that news last week when it made the reversal was a setup. Investors were set up, and I think that at the same time that people orchestrating the setup were building a big short position. In hindsight, you can see that.
The consensus is the market was universally caught off guard on this. And even when Apple went in a different direction, there was some concerns about the cash position. I don't think anyone expected it to be this bad. So I do think that there is going to be some litigation here, but it's almost impossible to play that from the equity position and from a retail standpoint.
Well, and Jim, a lot of people saying we're America. We should want a strong dollar. It's time to stop playing this, to the bottom currency game with the rest of the world. Let's have a strong dollar and a strong economy.
I mean, I think the Fed has been ahead of the curve. And with that, you look what Europe's doing in trying to devalue its currency. And now you're seeing the reaction to that is the strong dollar. Fact is, U.S. dollar getting stronger. Short-term interest rates, depending on the timing, they're going to go up. Profit margins at 20 years highs. There is some pressure on the stock market. Maybe there's some cheaper plays elsewhere. So I do think it's a real headwind.
Because my portfolio for the last 5-6 years have been predicated on a massive global economy, 1 billion new middle-class people around the world. But there are hiccups. There are hiccups in Brazil, Chile, Russia, even Germany, Jim.
The consumer is doing better. With the economy recovering, I do expect the consumer space, to your point, to think about some of this a little more locally. I do think the consumer has some wind in their sail, and they're not going to be as concerned with the U.S. dollar.
And death and inheritance.
Well, tell me about it. I think I went to all 5 of them in the last 10 years. But I was reincarnated. All right, Jim, break this up. What are you saying?
I mean, I come from...
You're the statesman here.
I know. I was having some fun with this segment because I was thinking about... I came from a family with all boys. So my parents simply just told us these rules about you want money, you go get a job, you start saving if you want something. So I don't know if they chose anything other than just good advice, and I hope that's being given. But I think that is a little old school. I think more and more the education starts. But again, start saving, get a job, put your money to work when you're ready for it.
At a very young age, too.
At a
It
very
can't
young
just
age.
happen in order to feed themselves because they do not have food going over to them.
Okay, what
and so
about
you're
the
going to
guy-
build you
Great
going to
point.
support a music bar over in Damascus?
Okay, so when you go
No
to a
way.
high-end restaurant and below $300, do you not do that because a homeless guy outside has no food? No, you still go to the restaurant.
When I
That's a
read the
different
story,
story.
I was going to use the cliche that Rome is burning, but I didn't need to use Rome because Syria is burning. But the fact is, this is really an emphasis on the haves and have-nots. This area is loyal to President Assad. The money is coming from his brother. So you're right. This is extreme haves, have-nots. To Matt's point, you know what? We have a lot of issues at home, and we still, there are many of us who are living, quite well. So again, I'm not in favor of it, but
could this be the
globally also. But this country, I mean, so close to Damascus where people are starving. I mean, come on.
Could you have even imagined
It's just a slap in the face.
exists? Could you have even imagined that amusement park even exists? I couldn't until I
But
saw
you
the
did
story.
say that during a break that people do go there and it gives them a sense of relief. Even if they can't afford to go in, it can kind of take them away from the devastation of their day-to-day lives.
There are visitors who are going because the area is safe. It always has electricity and the lights. There is enjoyment, even if you can't afford the $10 equivalent to get access to the
us
park.
sitting here.
Jim?
It's the only publicly traded retailer focusing on this market, this niche market. So they had a great second quarter, revenues, same-store sales, earning per share. But the fact is, I think they're in the right place at the right time, and either the large retailers are going to have to do something like an acquisition or respect the fact that they're playing where they're not.
Heath, I just say let's finish it off. Let's close up shop at the Federal Reserve once and for all. Jim, what do you think?
At the height of the crisis, it was the Fed that I think kept the sanest head and saved the day. That said, the fact is there had been a lot of ailments as a result of the easy lending and helicopter bend.
I hear you.
But
Too
they
much
did save the
easy
day.
money, and the Fed is only for ultra-rich and banks. Hey, guys, thank you very much. Great show.